Hey, good morning, everybody. Welcome to Tuesday, June 11th. Sorry I missed y'all yesterday. Took a little time off. Able to have our whole family together um, over the weekend and just spend some time together. And so we were glad to be able to do that. You can see there we enjoyed a little bit of Disney time. Hey, Dave will be with us in just a moment, and we'll get started this morning.
Magic Route 839 here, 21 before 9. It is 74 degrees now, sunshine in the hood, and I bring up sunshine because all of a sudden sun started shining on the stock market over the last couple of trading sessions after we started making nice with Mexico. Let's see if we can keep the green ink going today. Downtown Sebring, we head to the offices of Statler Financial Services. Phillip Statler standing by. Phillip, good morning. How are you?
Hey, good morning, Dave. Glad to be back with you after taking a couple days off. And so it looked like you held things together pretty well while I was out.
Yeah, I got Trump and China or Trump and Mexico to kiss and make up, and that made the market happy. So it looks like the market now figures if we can get along with Mexico, maybe we'll kiss and make up with China and just forget about all those little nasty tariff issues and the like, right?
Well, and I think the other thing that happened on Friday was, we talked about how bad the jobs rate was on Friday. And I think it was a case of bad news meant good news because that gave a little bit higher probability to the fact that we probably will see some interest rate cuts here between now and the end of the year. And so, the stock market liked that.
That was the conventional wisdom I was reading. Friday was a barn burner good day, and a lot of it was, well, an interest-sensitive stock, and there are a lot of them out there. If its cost of borrowing goes down, expenses go down, that means profit goes up, and that's good for the stock market. So, yeah, it is one of those bad news equals good news phenomena, isn't it?
Yeah, and then it carried through the weekend and up on Monday. So, I mean, even yesterday, you can't complain when we have pretty good green ink. As a matter of fact, the NASDAQ now is finally in positive territory when it comes to the last 12 months return. I think they're up about between 2 and 3% right now. Monday.
I'm sorry. I'm sorry. I was going to say I hadn't checked the year to date, but we were skin of the teeth positive on the two other indexes, and Nasdaq was negative. I'm going to bet that means the Dow and the S&P have a little breathing room now too, don't they?
Yes, they do. Yep, that's true. And so that was a big help. Now let's see if we can keep things rolling. And I think as long as we continue to get positive trade talk, rumors and things coming out, that's going to be good for the marketplace.
And it doesn't hurt the fact that President Trump hasn't been busy on his cell phone with his Twitter account talking economics as well, because when he doesn't say anything, generally the economy seems to do all right, doesn't it?
Yeah, it does seem to. And let's face it, we're at the end of earnings season. There's not much else left to really come out and stir the markets up much.
True, and one importune tweet can do all kinds of damage on the stock market. We're into the biggest number that we got for the week for all intents and purposes, and we're getting inflation numbers today and tomorrow. Today it was the producer price inflation number, and basically it's going absolutely nowhere. 0.1% increase overall. That means the producer price inflation is at 2.2%. Annualized across a 12-month period. That's about what the Federal Reserve expected. So it probably doesn't, I would expect anyway, change the expectation of an interest rate change.
No, it really doesn't, Dave. That was as expected. That number was in line with what everybody was predicting. So, it's not got much, it's not hurting or helping the markets either way today as it was expected.
We'll take that happily. The other news item that I had that made note in my mind anyway was the government put out the Index of Small Business Optimism from the National Federation of Independent Businesses. Now, the index itself is kind of something that you'd have to go 10 feet deep to figure out what it means, but it went up to 105.0 in May. Economists were expecting 102, but the significance of that 105 is that's the best level of business optimism in this country since before that drawn-out 35-day government shutdown that kind of put us all in a funk. That doesn't help. It doesn't hurt in the least to have, the companies in good humor overall.
Well, no, it doesn't. And it gives you a barometer of what businesses think of what the economic circumstances are and how that's going to affect them. And so, a rise in optimism in a small business, a medium-sized business environment is definitely a good thing.
Absolutely. The only other economic report that I noticed when I looked through the calendar yesterday is we're going to get import prices for May on Thursday. That's going to be the first monthly report on import prices that we have post the beginning of the substantial import tariffs from China. Is that going to weigh heavier on the market than it normally would, or are we going to kind of blow that off as well?
Well, we may kind of blow that off just because we know that given some of the import tariffs and some of that stuff that number is probably going to be lower, and I would think that was probably going to be the expectation.
I would expect that it would be the expectation. I'm wondering whether or not there's going to be a hyper reaction to if it comes out to be a public relations surprise. End of earnings season, not much going on, but we do have a few stocks that might move the market, at least in their sector this morning, right?
Yeah, we do. Before we do, I want to just mention a couple of things that are going on right now. Shutterfly, the picture place that you can house all your pictures, and a lot of people use it, is getting bought by a private equity firm. And they're going to combine two of these type of businesses together to get some synergy there. So some information there coming out. On the earnings front, we have HD Supply Holdings. They've come out. They're an industrial distributor. They came in at 84 cents a share, which was 3 cents above estimates. Revenue was just slightly above what Wall Street had forecasted, and so they're not doing real well today. They're down 7% before the market opens up.
Wait a minute, they beat the street, but they still get creamed.
Well, they did. I think the issue is going to be organic sales. We're up 5.8%. I don't have anything to compare that to, but I wonder if that was not what people thought it should be, or if revenue was so slightly above expectations that they were hoping for a bigger beat on revenue.
Okay. And on these smaller companies, sometimes there's so many variables that go into the things. Even when the number that we were looking at, Ford, General Motors, the bigger companies, the predictable response. When they're a smaller company, there are variables involved that sometimes can make a stock go the opposite direction you'd expect.
Well, that's true, and you don't see all those things in the things we get to see. So, on another front, we got a couple retail companies. We got Ascenia Retail, which didn't mean much to me, but then I dig a little deeper, and that's the parent company of Ann Taylor, Lane Bryant, recognizable names that we all see in the malls. They saw revenues below estimates. The company profits were basically kind of flat on same-store sales. And so they're actually unchanged this morning, but it's a very low-price stock. And it's down towards its low 52 weeks. It's at 104 a share. So not much there to talk about. The last one I have is Chico's. It's another women's clothing store. They did beat by 2 cents a share. Revenue came in ahead of expectations, but they missed on same-store sales by about 0.4%. So they're getting whopped today. They're down 3.5%, almost at their 52-week low.
Wow, and that does kind of color in and continue to flesh out the story of specialty above midline retail. They have not had a good quarter overall. I can't think of too many that have done well this quarter. Can you?
No, not really specialty like that. I mean, and I'm looking at their year-to-date numbers. Chico's is down 39% year-to-date and 62% the last 12 months.
Ouch!
Yeah.
That's March. Well, setting the table for this morning, there was some good news from yesterday. We held on to the gains we had from Friday and added a little bit more onto them. The Dow was up by 79 points, up 1/3%. Standard & Poor's up almost 0.5%, up a little over 13. The NASDAQ continued its recovery. As Phillip mentioned, it's kind of in recovery mode coming out of its negative dip from the year-to-date. It was up 81 points, over 1 full percent yesterday. Phillip, 45 minutes before we open up throwing real money around this morning, what do things look like so far today?
Hey, it looks like we're going to keep going the same way, Dave. Maybe we can put 3 or 4 days together here. But the Dow's up a little over 0.5%, $145. The S&P 500 is up 0.6%, or $17.30, back over 2,900. We're 2,906 right now. The Nasdaq's up we're getting close to a point right now. It's up 0.9%, $68. And then we got gold trading down just a little bit. Silver up 0.5%. Crude oil is up 1.4% to $54 a barrel.
But I think that's a little bit lower than it was yesterday at this time. So sounds like we got a trading range on crude oil at the moment. I'm happy to see it staying put at the very least.
That is good. And then we've got the 10-year Treasury. It is ticking up. It's up to 2.16, which is still significantly lower where it was a month ago.
Oh, yeah. That kind of indicates a renewed faith in equities, at least to some corners, doesn't it?
Exactly.
Absolutely. Overseas markets, everything up, Asia and Europe this morning so far through the trading day. Phillip, somebody need to stabilize their retirement, figure out how to make it grow and make it more secure. You've got a bunch of tools available, including a real easy cell phone text message, right?
I do. It's easy to get a free report on understanding market corrections. All you have to do is text the word market to 863-285-3815. It's that easy to do. And then they can call us, get a free appointment on understanding the market corrections and making sure they don't have too much risk in their current portfolio by calling 382-0037. Follow us on Facebook at Statler Financial Services. And then catch us every weekend for our radio show, noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
And, of course, streaming online at newstalk730am.com. Phillip, thank you again very much, and we'll catch you in the morning, all right?
All right, thanks, Dave. You take care.
You be well. It's 105.7 Light FM. It's Statler Financial Services. Phillip Statler.
Hey, again, I want to thank you for joining us today. I hope you got a little something out of today. And again, I look forward to speaking to you again tomorrow. Before I leave, though, I want to remind you one more time about our free report on market corrections. Is easy to get. All you have to do is text the word market to 863-285-3815 to get your free report. Hey, have a great day. I will talk to you again tomorrow.